You are listening to chartingwealth.com for Tuesday, the 31st of May, 2016. What do we have going on? Well, we had a breach in our two-day trend line back on the 24th of May. And we have had a crossover not yet occur on the MACD, but we have seen the derivative oscillator crossover going up, getting very, very close to a crossover on our total market. That is the IYY. It has not yet occurred, but could occur on Monday. We shall see. We do not call it until we see it. We have three two-day candles with lots of up movement going on. Got a super strong candle on May the 26th. We have a candle that's halfway through being drawn, so it's of the two-day candle, it's 1 day. That was on the 27th. We'll see how that finishes up on the 31st, and we'll continue to watch. Now, if we look at what happened intraday on Friday, we see that our 4-hour chart shows we had some up movement in the morning, more in the afternoon, no down movement on our Heikin Ashi charts. If you would like to know more about what the Heikin Ashi chart is, we've got a great training. It's the latest one that we put online. If you go to chartingwealth.com, you will see it. We see that the 4-hour chart is losing some of its steam as per the derivative oscillator. We're about the same on the MACD and the signal line, so we'll continue to watch. Again, we are in a confirmed a confirmed down move on the long chart and an up move on the short chart. But remember, the short chart does not make the up chart, the large chart. So we'll continue to watch and see just what's going on and what ends up working out. Monday will be a big day to see what happens. I'm sorry, keep saying Monday. It's actually Tuesday. We have the holiday, of course, on Monday, Memorial Day. So if I say that anymore during the course of the podcast, please forgive me. It is a long-term habit of saying Monday. Okay, let's go next to the S&P 500 on the two-day chart. Looks somewhat similar to IYY, the total market. It's not yet crossed over, although the derivative oscillator has turned positive. We'll continue to watch that as it develops. If we look at our 4-hour chart, we again see up movement in the morning and the afternoon. On Friday, derivative oscillators lost a little bit of its speed, but we pretty much have a parallel move going on the MACD and the signal line. Now let's go back to our two-day chart. For the record, IYY up 0.41% on Friday, and the S&P 500 up 0.43%. Now let's go to the Qs. What's the Qs up? 0.52%. What is the Qs? Well, of course, that's the NASDAQ 100. It actually crossed over on the two-day chart back on the 26th, so it has a confirmed up move. We see two strong up moving derivative oscillators, and of course a divergence, that is a pulling apart between the signal line and the MACD line, which is a blue line. On our chart, the signal line is a red line. Three big up candles, no down movement on those Heikin Ashi green open box candles. So if we go to our 4-hour chart, what do we see going on there? We see the derivative oscillator again peaked out on the 26th in the morning and has lost energy since then. However, the the candlesticks have continued to gain energy, continued to move up. MACD, of course, crossed over going up on the 4-hour chart back on the 20th, and we have continued to see that move up. Now, lastly, we're going to go back to our two-day chart. We're going to take a look at gold, down 0.82%. We've got a strong down movement in gold ever since, well, gold crossed over back on the 18th going down, about the same time that it crossed over on the MACD. The derivative oscillator crossed over, continued to gain down movement energy. And we see strong down candles for 4 two-day candles, 8 days, well, actually 7 days because we've not closed out yet the candle on the 27th. So we'll continue to watch and see how that shapes up on Tuesday. Now let's look lastly at the 4-hour chart. And the 4-hour chart shows us that, again, continued down movement, although derivative oscillators started losing energy since it peaked out on the 26th, and we continue to see the MACD and the signal line pretty much run parallel for about the last day and a half or so. They were wider apart on the 25th. They have been getting closer together, so we'll continue to watch gold, see if there's a pullback and perhaps a point to get in, still well below the 2-day trend line on gold. That is where we ended up. Hopefully you've already listened to our weekly review and forecast. If you've not done so, you need to do so. We also love to hear from you here at Charting Wealth. CW as in Charting Wealth, cw@chartingwealth.com is our email address. You can always go to Charting Wealth, sign up for our newsletter. You'll receive our daily podcast, plus once a week our weekly review and forecast. You'll also receive any trainings that we put out, and the big deal is you'll receive our How to Read a Stock Chart video link, plus you'll get a link to our layout at freestockcharts.com. We always love to hear from you. We really appreciate if you go to iTunes, give us a 5-star rating, subscribe, say something nice about us. It's the best thing you can do for us. Thank you so much. We love to come to you every day that the market is open. And again, market's opening on Tuesday morning. We can't wait to see just what happens. Thanks so much for listening from chartingwealth.com.